Good morning, good afternoon, or good evening, depending on where you're listening. Welcome back to AI and the Future of Work. Thanks again for making this one of the most downloaded podcasts about the future of work. If you enjoy what we do, please like, comment, and share in your favorite podcast app, and we'll keep sharing great conversations. I'm your host, Dan Turchin, advisor at Insight Finder, the system of intelligence for IT operations, and CEO of PeopleRain, the AI platform for IT and HR employee service. Now, a few SaaS companies have become what I'll call household names in the future of workspace. One of them is certainly Cornerstone OnDemand, the talent and learning management platform. We often talk about the AI powering new employee experiences and the ethical and cultural implications of the data required to power it. We've spent less time discussing the actual products wrapped around that AI that deliver the employee experiences. Guests like Panos Siozos from LearnWorlds and Brian Tolaby from Ahura have introduced us to new ways to upskill and reskill in preparation for automation. But there's also this whole ecosystem of technologies that employees interact with every day that are being reimagined by great entrepreneurs and investors who believe work is overdue for disruption. Well, today's guest has spent more than a decade defining and investing in the future of work. While at Cornerstone OnDemand, he helped grow the business from about $40 million to over $500 million in ARR. His passion for technology that helps employees led him to start Acadian Ventures about 3 years back, where he invests in companies that are transforming work like Getro, Brio HR, and Oyster. Thanks to Dave Kellogg for the introduction to Jason. Without further ado, it's my pleasure to welcome Jason Corsello from Acadian Ventures to the podcast. Jason, good to have you here. Let's kick things off. Why don't you share a little bit more about your background and how you got into this space?
Yeah, certainly, Dan, and thanks for having me here today. I'm certainly excited to have a fun conversation here. I'll try to give you the short version of my background, which is I grew up as a child of Silicon Valley back in the 80s, and this is, pre what we know of Silicon Valley today. Back then it was companies like IBM and Hewlett Packard and eventually Intel that were kind of defining Silicon Valley at that moment. But I grew up in the Valley, and that's really, from those early days of my childhood where I fell in love with technology. I went to school in San Diego. After I graduated from San Diego, I didn't really know what I wanted to do. Went back to the Bay Area, and at that time in kind of the mid 90s, started working for startup companies, although they weren't necessarily defined as startup companies. I had a mixed bag of successes. One company went public, another company failed miserably. Got to wear lots of different hats. One being what now we call client success. Got to be a product manager at times. So really got to experience everything of Silicon Valley back in the kind of 80s and 90s. About 15 years ago, I decided to get married and ended up moving back east, and didn't know what my kind of career journey. I was a little bit lost in my career at that time, and got a job at a market research firm in Boston. And that's really where I kind of stumbled into this world of work tech, HR tech, what everyone likes to call future of work. And I just fell in love with it. And so, I just, at that time, it was kind of the first generation of SaaS. And I decided I wanted to be the guy that kind of showed up at every event and learned as much as possible about the industry itself. And, that was at the onset of companies like SuccessFactors and Taleo, and ultimately Workday, and eventually Cornerstone, where I ended up working. And so got to really embrace myself in the world of work tech and HR tech. And here I am now, almost 20 years later, and I'm still in this world, although my career has changed more to the investor side than the operating side. But it's an industry I just, like I said, I fell in love with. I love the industry. I love the pace of innovation that's happening right now, and that's predominantly why I'm spending all of my time on the investing side today.
The best investors tend to have been operators, and in your case, you're both an operator and an analyst before becoming an investor. What did those roles teach you as you invest?
Yeah, it's It's really fascinating because to me, it really, at the 7 years while I was at Cornerstone, it was a tremendous ride. It was a tremendous experience. We had just a fantastic team that I got to work with, including the CEO, Adam Miller. And during that time, I really learned three things. I learned more than three things, but three things that really kind of stick out. The first is empathy of founders. I watched Adam. Adam was a founder that took a company public, and the challenges that he went through on an every single day basis was just mind-boggling. And so I have a lot of empathy for founders because building startups is extremely, extremely hard. It's never up and to the right. Every day is a new challenge. One of the bigger challenges around empathy was, at Cornerstone, I think we had is either 12 or 14 quarters of beat and raise. This is back in 2011 through 2014. Wall Street really loved us. We were growing at 70% quarter over quarter, which, at the time was pretty phenomenal for those first generation SaaS companies. And we had a couple of missed quarters, and all of a sudden Wall Street hated us. And we had activist shareholders that came into mix, and oh my gosh, the distractions that they presented them, the company itself. So, really got to learn, getting beat up by shareholders really gives you a different perspective on being more empathetic to founders and founding teams and companies really doing the hard work. Two other things really quickly, and maybe they're somewhat interrelated, is prioritization and focus. As you're growing, again, you have many decisions that you have to make, and often it comes down to focusing on where you're going to get the most value of those decisions and those priorities. And so prioritization is hugely important, and I certainly learned that at Cornerstone. And the last that goes along with that is focus, right? And this is where I think we probably made a little bit of a misstep at Cornerstone, as we were growing very rapidly, and we kind of thought we could do everything, and we started doing everything, and all of a sudden we found, wow, we're trying to do too much. We're building too much. We're trying to grow into too many geographies in terms of the go-to-market, and it really, really hurt us. And so focus, whether you're big or whether you're small, is extremely, extremely important.
What's the most recent deal that you announced, and what got you so excited about the team and the product?
Yeah, Dan, I'll give you three. So the one that one of the ones we most recently announced was a company called Compa, where we co-invested with Base 10 Partners and Acadian Ventures out of LA. It's an LA-based company. And the way I like to describe Compa is it's deal desk for talent acquisition. And what I mean by that is, we all know in sales, especially with larger sales organizations, they have a deal desk, right? So the deal goes to the deal desk, and they make sure pricing is right, terms are right, any sort of things that you need, and provide a lot of intelligence. Most of it is manual intelligence, but a lot of intelligence around how do you want to shape that deal. In talent acquisition, and particularly in recruiting, we don't have any intelligence on why we make hires, how much we should pay them. Are they going to accept the offer or not? And so Compa is really trying to solve that problem, which is let's be smarter with what we think we should be offering in terms of compensation, and even use some intelligence to determine, hey, if we offer 10% more, do we have a 95% higher likelihood of winning the candidate? So they're putting a lot more intelligence around that talent acquisition process, particularly as it relates to compensation. Two other ones really, really quickly. One that we haven't necessarily formally announced, but it's a company called Assembly, which is also ironically based in Los Angeles. And Assembly is really, following this concept of no-code software. It's an area that I've gotten super fascinated with. We've seen successes with companies like Airtable and Notion, particularly around productivity. But I think, and this, Dan, with all the complexities related to HR processes and workflows, I have a belief that, no code can solve a big problem. And I think more, if you look at kind of the generations of software, generation one of kind of the on-premise world was customizing the heck out of software to deliver what exactly the customer needed. The SaaS world moved from customization to configuration, right? Let's, use the software and SaaS to really configure the implementation of the deployment of the technology. And I think we're going into this third generation, which is ironically not customized or configured, it's assembled, ironically, assembly, where you can take the building blocks, the pieces, the templates, the APIs, and allow someone with somewhat non-coding, non-development expertise to be able to do that work themselves. And then one last one, I just remiss, it's actually a company we're going to announce next week, so it's a little bit of a teaser. But it's this idea around kind of performance and engagement, whereas it's kind of flipping the script on performance engagement, which is much more designed for the employee. So it's not just looking at what your past performance or how you engage employees. It's actually kind of looking at work and life and now wellness all collectively in kind of one application. And I think the last 2 years has kind of helped reinforce this, that we just don't go to work to earn a paycheck, right? And we're now balancing all these demands of work life and now, our own well-being. So that's one that we got involved very, very early. In fact, helped incubate the company. And those are just three of a few examples, but somewhat different in the theses, but more broadly aligned with kind of what we talked about at the beginning, is this whole new kind of transformation that's happening in work today.
You're talking to many WorkTech entrepreneurs. Tell us a little bit more about Acadian, size of fund, stage fit, theses, beyond. I mean, obviously, you mentioned 3 great examples, but a little more about the fund.
Yeah, Dan, so a little bit of backdrop, in my career in venture. So when I was at Cornerstone, we launched a corporate venture fund. This is back in 2014. And I like to say I made all the mistakes of venture, but I also learned all of the constraints of corporate venture, where we would love a company. In fact, there's been many successes in our, what I call our anti-portfolio, or stealing the bessemer term of the anti-portfolio, where we found companies that ultimately became successful, but we couldn't invest in them because of the constraints of either the competitive threat or risks or what have you. One thing is, I was doing corporate venture, we would meet with hundreds of entrepreneurs and entrepreneurs like yourselves, that we would always get the question of like, who are the VCs that really understand this world of kind of work tech and HR tech? And I would always scratch my head, and I could never think of either like a person or a firm. And that's not to say there aren't great venture investors out there, but what that told me is I thought there was an interesting opportunity to kind of create a specialized fund in work tech or HR tech. And so in 2018, I was kind of socializing the idea, and I decided in 2019, I was just going to do it on my own. So in 2019, I launched what many call now a solo GP fund, which is essentially myself as the only investing partner. We predominantly focus on seed stage investing, typically write checks upwards of $1 million, so between $500,000 and $1 million. And we typically come in at the seed stage, so relatively early on. Maybe companies do have product market fit, or maybe we just see an opportunity for new category creation. Today, we have 18 portfolio companies in the fund. We started investing, so we've been investing for about 2.5 years. We are slowly winding down with Fund 2 and hope to have an announcement around, or slowly finishing Fund 1 and hope to have an announcement around Fund 2 shortly.
You told us about 3 deals you said yes to. Tell us the most common reason why you say no.
Man, that's a great question. I'm not sure it's ever a singular reason why it's no. I mean, part of venture investing, it's almost one of my LPs who was a reporter many years back for the New York Times, kind of equated reporting with venture investing, which is like you're doing an investigation, right? You're trying to uncover the pieces to the puzzle. And that, to me, I think that's a pretty good analogy. In fact, that's why you see a lot of venture investors that were reporters, that were researchers, because it's kind of piecing this puzzle together. So it's never one singular thing. I try, I really care about the teams, and you hear that all too often, right? It's always about the teams, and it really is, because the hardest thing to assess in venture investing is stamina. Does the team have the stamina to get knocked down every day, or every couple of days and get back up? When we make an investment, we try to look at the opportunity as, one, is this a $100 million revenue opportunity, right? So is this a big enough opportunity to grow a business at scale? And 2, does the team have that stamina to endure the challenges to get to that milestone, if you will? And it's really hard to determine and hard to figure that out. But those are really the way I try to look at the world is the opportunity big enough, and do the founders really have that stamina? Because it's really not easy.
So the work tech space, as you and I know, is quite crowded, and yet there's exciting white space for innovation. What's one pitch or product that if you saw it come across your inbox, you'd fund today?
Let me tell you, maybe I'll tell you about a couple that we missed. And we missed because maybe we just didn't see them soon enough. But there's a couple of really interesting ideas more recently. There's a company called Merge that I ran into recently. And it really solves this pain that we had at Cornerstone, was the integration pain, right? In the world of HR tech and for large organizations, they're never usually just using a singular application or solution, right? In fact, many times they're using upwards of 100 different SaaS-based applications. But the constant challenge is always trying to figure out how to integrate them back and forth. Now, APIs have made it much more easier, in most recent years, but Merge is a company that's really trying to automate that whole integration process through API. It was unfortunate because I stumbled upon them way later than I probably would have preferred, and they already had raised lots of money from really good investors. But that's one we missed, and that's a real life case of like solving a big pain today, a pain that I experienced while being an operator, and I haven't seen anyone do it elegantly just yet. Let me flip the other. Let me try to answer the question in another different way, which is where I think there's opportunities for disruption. And I think a couple. One is, and this isn't probably going to answer a question, but I'll say it anyways, which is, I think there's an opportunity to disrupt LinkedIn. I don't know what that is. I don't know what it looks like. What's fascinating to me is LinkedIn, just reported 2 days ago, LinkedIn is still growing at 37%, phenomenally. It's just amazing how well they're still growing. But they have this kind of closed wall, closed garden, whatever you want to call it, of their data. And I think there's an interesting future opportunity, which is how can you do this? Maybe it's through Web3 and blockchain and decentralization, but an opportunity to disrupt LinkedIn because, they aren't necessarily open. They're difficult to partner with. And, in this new world order, it's all about, openness, community. And so that's one. It probably didn't answer your question, but I think an opportunity for disruption. I also think, and this is probably a very curmudgeon-y answer, but there's an opportunity to disrupt payroll. Because the way I think about it is, and there's been a little bit of disruption. It's mostly been the incumbents choosing what now they call earned wage access, EWA. But like, we've been hardwired to expect that we're going to get a paycheck every 2 weeks or every 4 weeks, right? And the payroll companies make a lot of money in the float in between that time, right? And then this kind of Bezos mentality of your margin is my opportunity. I think there's an interesting opportunity in payroll, and part of that is to give individuals, employees, greater access to their pay, more real-time access to their pay. I think secondarily to that is this kind of intersection of payroll and or work tech, HR tech, and fintech, which is, payroll data is hugely valuable, right? Companies are making billions and trillions of dollars of decisions on who gets a loan, who gets a mortgage. And so how can you actually use that data? And how can I own that data as an employee, as a person, to get greater access to capital, to get greater access to things when people know that I have a certain income and that, I have a certain credibility because of that income. So probably didn't specifically answer your question, but those are two kind of standing markets today that I think are ready for disruption, in part because the incumbents have just created this fascinating margin that can be disrupted.
We use Gusto at PeopleRain, and I've used Rippling and some of the other modern entrants, and can't believe how easy it was to disrupt ADP. As we see that trend continue, you mentioned the disruption of payroll. Where else do we go? Like you said, EWA, but it seems like the incumbents are in the process of being disrupted. Are you envisioning a time when Gusto, Rippling, new entrants are disrupted themselves?
It could be. I mean, what's fascinating about ADP, and don't quote me on these numbers, but I heard a couple of years ago, ADP loses $1 billion of revenue every year from just churn, right? Customers that are leasing ADP to go to Gusto or somewhere else, right? So they're not going to be disrupted overnight. But I do think there's certainly opportunity for the Gustos. Gustos and Ripplings are certainly have been innovative companies, but they've only focused on a kind of small portion of the market. I just think there's opportunities, and maybe they continue to be the disruptors. But I think there's this interesting opportunity as we move towards this. I don't want to call it the freelancer economy, but this idea that we're going to work for multiple employees. And then it's not just easy to verify income by calling your 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 employer, because maybe you don't have a central employer. Maybe you have 4 different employers. Maybe you're a 1099. Like, it's going to be harder. It already is harder for those types of employees to get access to capital, to go off and get a mortgage. And so the disruption is there. I don't necessarily know what it looks like. If I did, I'd probably start a company. Although I don't know if I have the stamina to start a company. I'd much rather invest in the company than start it. But I do think there's an interesting opportunity there. And the successes of the ADPs and Paychecks tell you it's a huge market, right? Globally, it's a huge market. Lots of opportunity there for sure.
We can't talk about the future of work without talking about AI. And we can't talk about AI without talking about the impact that it might have on jobs as more processes are automated. How threatened should HR teams feel by the incursion of AI?
Wow, it's such a good question. And, while they shouldn't be threatened, they are. Certainly, I know, I've worked with my fair share of HR departments to know that anything new, anything disruptive is certainly threatening, right? Especially if you're talking about HR being risk averse. And for a lot of HR departments, it's a lot easier to say no than it is to say, yes, let's try it, even though there's some sensitivity involved. So I think there's certainly a lot of threat because, HR departments, by the nature of the jobs they serve and the roles they play, have access to a tremendous amount of highly sensitive data, right? PII data that, we've seen cases where companies have been hacked, and you never want to be on the front page of the Wall Street Journal. So they're certainly threatening. I say that when I was at Cornerstone, I would talk to customers all the time, and I would tell them they should be carving out some budget for experimentation, whether that's experimentation on AI or new tools using AI. So it's a difficult question, Dan, because I think most HR departments know that they can and should be using AI. Some use cases of AI in HR haven't gone so successfully, right? Using facial recognition to make hiring decisions and things like that. So they've pulled back a little bit. But the way I like to think about it, Dan, is we have tremendous amounts of data in HR, right? A 10,000 person organization has huge value in that HR data, right? We should know skills. We know pay progression. We know experiences. We know what people have learned and what training they've completed. And we know, beyond just that demographical data, we know some of the behavioral data, like how long it took them from go to one job to another. I don't know if you consider that behavioral data, but we have a tremendous amount of data that just goes unused today. So why aren't we using it more innovatively and attempting to use AI more progressively? So I think it's happening out there in pockets. It's certainly not happening out there at scale. But I think what you're doing at People Reign and what others are doing, I think we're making progress. We're probably not making progress as fast as I would like to see, but I think as we start to see some of the successes of, oh yeah, we can use this data and we're having great success, and not only is it saving money, but it's helping us accelerate our business. That's what we need, and like I said, it's probably going slower than I would certainly like to see, but it's inevitably going to happen. To me, as I kind of wrote this in our annual letter recently, is the next 10 years, who wins the next 10 years are going to be the companies that figure out how to build their talent factories, right? Because it's all about talent. It's not just like finding the smartest people in the room. It's also building the culture. It's engaging them. It's keeping them, involved and tied to the business. So long response to your question, Dan, but I think we're still early days and still a tremendous amount of opportunity to leverage AI.
I talked in the intro about the need for reskilling and upskilling. And one of the things I've shared openly on this show in the past is if you're in a job that is easily enough automated by a machine, it's a really good time to think about what's a career that's not easily automated, because AI and AI-driven automation will be a net creator of many more jobs than it eliminates. I firmly believe that. I've also said frequently in the past, anything that can be predicted is better left to machines, but anything that requires rational thinking or empathy or creativity is better left to humans. So yes, this is me on a soapbox, but I firmly believe that it's a really good opportunity, like a wake-up call opportunity for anyone who's in a job that's that easily automated. Does that resonate with pitches that you see and with your thesis?
Absolutely. As part of our fund thesis, we don't look at automation, robotics as an example, where we invest. It's just outside of our kind of domain. But to your point, I absolutely agree that many low wage jobs are going to be automated away. We're already seeing it, and frankly, I think what's happened over the last even 18 months, where we have this huge gap between hires and positions open, and just this disconnect in the economy and the jobs economy right now. It's going to force companies to automate because they can't find people to fill the jobs that they need today. So this divide is going to get, I think, even harder. That doesn't mean it's going to kill all these jobs. I completely agree with you. It's going to be a net job creator over time, and it is. We see it because a lot of these highly skilled jobs we can't fill fast enough either, right? I mean, I look across our portfolio companies, and it's a small subset, right? We've got just under 20 portfolio companies. Every single one of them needs to hire engineers, and they can't find them right now, right? And this is just, if you think about not just software companies, tech companies, but traditional industrial companies that need to hire engineers that are moving towards automation. There is a huge demand, and I like to say a lot of companies in the WorkTech area are helping bridge this divide, right? It's not, like I said, it's not going to happen overnight, but through training, through upskilling, through reskilling, there's lots of different ways. Now, I'm not a believer that you can expect that many low skill workers are going to become high skill workers, right? Because you also have to match the desire and the ambitions of individuals, and sometimes the gap is too large that you can't expect someone's going to becoming a software developer overnight. But we're certainly going to shrink that gap so it doesn't take 4 years, 5 years, 10 years. It can take 1 year, 2 year. So I'm certainly optimistic, and I certainly am a believer of what you stated, which is their automation is going to force us to do a lot of things much better. And this disruption we'll look back in 10 years and say, wow, it's a completely different world.
You mentioned the winners will be the ones who best build talent factories, and I love that image. And you alluded to the fact that access to data, that's really the lifeblood of the talent factory. On this show, we talk a lot about the ethics of your data and how it can be used, and when it's used, how much should you know about how it's used, and if an automated decision is made on your behalf, is it the obligation of the software, the vendor, the community to let you know about the data that fed that decision? So against that backdrop, to what extent do you think access to data and regulatory issues around data access will constrain the innovation that's required to make it easier to create those talent factories?
It's like I said, we have a lot of access to data. There are a lot of constraints, right? And concerns. To me, it really comes down to whether you're a software, company, or whether you're, General Electric, that's probably or IBM, right? Is the transparency and the opt-in of how that data is being used, right? So as an individual, I should be able to have control over my data to say, yeah, I want my company to have access into, certain aspects of how I use the software, or certain, things that they know about me, my skills, whatever, maybe my compensation. So there is a bit of disconnect, and I think there's still a lot of exploration. I mean, obviously GDPR has changed a lot of things. How we manage privacy is kind of ever evolving. Security is ever evolving, but I think that the net is, I'm optimistic that companies are net good in that, they just don't want to take individual data and use it for ill-intended reasons. We've made one company I didn't mention. We invested in a company. It was fairly early on in the company that is actually using looking through your messaging applications, right? So your Slack, your email, and it can almost predict your burnout. Are you burnt out? Your wellness? Are you redlining? And it's interesting because they're tapping into systems and getting insight using linguistics technology to make those determinations. Now, me as an employee, I have access and I own that data. Now, the question is, do I give that access to my employer or even my manager? And so there's a lot of rules and constraints that you have to build into that, into that workflow, if you will. It's super early and maybe one of these companies that might be even too early, but what I would suggest, Dan, is like, we have all this data. We, using AI, linguistics, whatever, like, we can get a lot of inference and insight into that data. It really comes down to how we want to use it and how progressive we want to be. Because, when I was at Cornerstone, I'd certainly like to know 3 months or 6 months in advance if I had an employee that was redlining. And sometimes you just don't know, right? You just can't tell. But certainly you can tell through the data. So I don't know if that answered your question, but AI has been a fascinating topic, as you know, in the HR world, and we probably got a little bit ahead of our skis 5 years ago when we all started talking about how AI can be hugely impactful. And I think we've scratched the surface a little bit. I think there's still a long way to go.
So think about some of the moonshot pitches that you've heard and polish your crystal ball. Let's say, in 10, 15, maybe even 20 years, we're having a version of this conversation. What's one behavior that will be commonplace at work then that today, would seem like Jetson style science fiction?
I'm not a believer yet, and maybe I won't ever be, in this idea of the metaverse, right? Or the metaverse as it applies to work. And maybe it's just because I'm curmudgeon-y and I'm no longer 20 years old or 21 years old, and I didn't although I grew up playing video games, I certainly don't play them as much today. But I'm a bit so I'm going to tell you what I don't believe in, which is I'm not hugely bullish on this idea of the metaverse. I'm not least convinced yet, right? I'm watching what a lot of folks are doing, and there's a lot of interesting startups, but that whole Jetson style of the world, I'm not bought into. I'll answer your question a little bit differently, which is, I think what technology is enabling us and where I expect to see the world in 10 years, and this probably isn't hugely provocative, so I'll apologize, but it's this idea that we're tied to a single employer. I don't think in 10 years, most individuals are going to be tethered to a single employer. We're already seeing it today. I see it every day where friends, neighbors, colleagues, are doing side hustles or doing, have decided they don't want to work for their company they've worked for 10 years. And maybe they go into a consulting role because they have 5 other or 3 other or 2 other aspirations or things that they want to chase because they've thought about them for a very long time. So I guess my big prediction, which is probably not a big prediction, is in 10 years, we're not going to be tied to a single employer. We're going to be doing 2, 3, 4 jobs. For me, my full-time job is being an investor, but I have a weekend hustle where I do volunteer ski patrol, and it's just something that I absolutely enjoy. And then I, help do some advisory work for a private equity firm. So that's my big but not big prediction, I guess, if that answers your question.
A few months ago, we had a fascinating conversation with a guy named Gary Bowles, who wrote a book called The Next Rules of Work. He's a multi-book published author. He's the head of Future of Work at Singularity University, which Ray Kurzweil founded. Mm-hmm. And he talks about the future of work is each employee will have a work net. And the work net is kind of this fabric, kind of this loosely knit fabric of jobs or gigs stitched together to make a career. And to your point, it's not about being married to a single employer. It's about pursuing a bunch of things that make up who you are, and that's the way to build a career around the whole self. What do you think about that idea?
I agree. And I look at the technology of evolution in the last 10 years have made it even possible to do that, right? I'll give you a very simple example, like Shopify, right? Like Shopify has opened up this whole entrepreneurial community to go and open a business, right? That you couldn't do even 5 years ago. we have these entrepreneurs that are coming out of the woodwork because of the advances of technology for, what seems to be simple things like, e-commerce that Shopify is doing. So it's a very simple example, but, it's something that, I get excited about. I mean, my children, one that's my middle child is 13, my youngest is 11, and they look forward to watching Shark Tank every week, right? And it's funny, like they even now can look at and think about valuations, and maybe I've damaged them a little bit, but we talk as we watch Shark Tank, we talk about, is that a good valuation or not a good valuation, and we talk about the market opportunity. And so all of these things collectively, have opened up this entrepreneurial world that allows and will allow my kids to be able to chase things and do multiple jobs and have interesting opportunities while not having to be forced to go into the same 9-to-5 job that maybe our parents went to that didn't necessarily enjoy. So it's certainly, I think it's super exciting.
Who's the favorite shark in the Corsello household?
Oh boy. I think universally it's Mark Cuban. Yeah, maybe it's
an easy answer for anyone who has Silicon Valley roots.
Yeah, I think you're right. I think it's an easy answer.
Jason, I got to get you off the hot seat, but one question I want to get your take on before I can let you go. So splashed across the headlines almost daily is something about the quote, great resignation. What's your perspective on that? Is it real? Is it overblown? And to the extent it's real, what should employers be doing to kind of stem this rising tide and keep employees, and maybe even use it as an opportunity to poach talent that's leaving their competitors?
Short term, it is absolutely real. Long term, I think it's somewhat unknown, but I do think, we put together what we call our state of work report, which, in that I look at all kinds of different data, macro data, all kinds of data, and, this whole disconnect of jobs and opportunities and is very real. And so, this is probably a longer discussion than we have right now, but I think, without getting into kind of trying to avoid politics, I mean, the stimulus obviously did a lot of good things, but it created a lot of damage along the way. I think the one thing in between is that people realize they don't want to work for jerks anymore, right? And they want to work they don't want to just go to work to earn an income. And people have taken big risks to say, you know what, I'm out, and they don't have jobs anymore. Now, maybe they have belief that the economy is strong enough that when they do want to go back and re-enter the workforce, they're going to be, the arms are going to be wide open for companies to take them back in. And that probably is somewhat true. But I guess what I'm getting at is I think the great resignation is certainly real, but I think it should be eye-opening for every company, big, small, and in between, which is back to this idea of talent factories. Building a talent factory is very, very complex, because that means you have the muscle to recruit at scale and recruit companies that would be a good fit for your organization. It means you're building a culture that people can embrace and people want to go and work for. It means that you're creating an environment for people to want to stay. Maybe that's because you're developing them, you're training them, you're giving them additional skills. Maybe it's you're paying them more. So this idea of building a talent factory isn't just the silver bullet of, we're just going to pay everyone more. We're going to pay them 20% more and everyone's going to be happier. It's very, very comprehensive. And you have to build muscle on the skills development side. You have to build the muscle on keeping employees engaged and building a unique culture. You need to build muscle around recruiting, because recruiting is more important than ever. So that's where I think, as I said earlier, the companies that are leading markets in the next 10 years are going to be the ones that build those talent factories. And I think we see some of that today, right? People want to go work for Airbnb. People want to go work, in some cases, for Tesla. And not to say Tesla is a perfect organization, but people know what they're going to get when they go and work there. And so I think in all of this, Dan, I think it's, companies need to be very, very intentional of what that talent strategy needs to be and building all the functions around that. And I firmly believe companies We'll be investing a lot more in technology in this area, in HR technology, in technology. Maybe they're building themselves in some cases because some of these solutions aren't necessarily in market today. But there's so much opportunity here, so much ability to leverage data. And in my perspective, SaaS-based technologies in HR and WorkTech are still relatively affordable, inexpensive. That there's just a huge opportunity ahead.
Where can our listeners go to get that state of work report?
Yeah, so you can find it. I just took it down from our website today, actually, because I published our annual report. So I'll put it up. We have an insight section on our website, acadianventures.com, that I'll put up today, and certainly people can get access to. We also have a blog, a Medium blog called Acadian Insights, where you can find it there as well.
Send me a link and I'll include it in the show notes.
Yeah, you bet.
Excellent. Gosh, Jason, the time flew by. So much more that we had planned to get to, but this has been a great conversation. Thanks for hanging out.
Yeah, this is awesome, Dan. Really enjoyed it, and thanks for having me.
You bet. That's the great Jason Corsello from Acadian Ventures. Follow him at jcorsello on Twitter. And gosh, that's a wrap for this week. This is your host, Dan Turchin from AI and the Future of Work, signing off. But we're back next week with another fascinating guest.